In order to model the P to E ratio for a company, we're first going to have to find a company and then find information about that company regarding the price of their stock and the earnings per share. So let's start by finding a company. So what I want you to do is go to www.google.com/finance. Once you're on that web page, go to where you see Stock Screener on the left-hand side. Now what this does is it allows you to screen stocks by certain criteria. So first of all, we want a company that has a fairly high market capitalization. What that means is they're very big companies, they're very stable, and typically are probably the better companies to invest in. So if you look right here, you can see market cap, and if you're not sure what that means, you can click on the question mark and it'll give you an explanation. But let's look for companies that have greater than a $1 billion market capitalization. So in here, I'm going to type 1, and looking at the other side, I see that they use B for billion. So B, and I hit enter. So I have now down below here 6,621 stocks that have a market capitalization of 1 billion and higher. Now, we're going to be modeling P to E ratios, and we need companies that have positive P to E ratios, but not incredibly high P to E ratios. So we're going to look for things that are between 5 and 25. And that drops us down to 1,522 companies. Finally, we want companies that have a dividend yield. That means that every year they will pay back money to the shareholders. We want them to have a dividend yield of at least 1%, but not more than 5%. This again gives us very solid companies. So now I'm down to 961 companies. That's a much more reasonable number than the roughly 30,000 that were on the stock exchanges to begin with. You see things like 3M. They're the manufacturers of Scotch tape and other adhesives. And if I scroll down through here, I'll see other companies. Now there's a couple things we want to probably avoid. If I'm looking at this list, I can see that there are some companies like Accenture, and it has PLC underneath it. PLC tends to tell me that this is a foreign company. In fact, Accenture is based in Great Britain. And that's not a big problem, but it's probably one you want to avoid. The reason for that is when they give their earnings, they give them in British pounds, yet their stock price is going to be in dollars. And doing a P to E ratio on that, we want both the price and the earnings to be in dollars. So I don't want to have to worry about converting between British pounds and dollars. So I'll avoid that. If I go to the very end of this list, what I see here are things like iShares Midcap 400 Value Index ETF. These actually aren't companies. These are groups of companies that you can buy shares in. So we want to avoid ETFs and mutual funds and things like that. So let me go backwards here a little bit. Those are all ETFs again. Let's find some companies. Now I'm starting to see some companies here. Go back a little bit farther. I see Washington Federal, that's a banking company. I see Walmart. And right here I see Verizon. Now, this is a company I'm familiar with because I get my cellular service through Verizon. It's always good to pick a company that you're familiar with. That way you have a little bit of intuition about what's going on. So I'm going to go ahead and click on that. And what this will do is take me to a page for Verizon that tells me what its stock price is, what's been going on over time. And so for the demonstration that I'll be doing to help you see how to do this project, I'm going to work with Verizon Communications, and they are listed on the New York Stock Exchange under VZ. So what you need to do, and each one of your team members need to do, is to go ahead and pick a separate stock to look at. Now, once you have gone ahead and figured out what stock you're going to look at, then you'll need to go into the spreadsheet that I've already shared with you. And looking at that spreadsheet, you'll want to list out the company. You'll put its name and then what its ticker symbol is. You want to make sure that each person on your team is looking at a different company to begin with. Eventually, you'll all settle upon the company of the 4 in your group, and you'll carry out the rest of the project with that company.